Hey guys, it's Jess Starr here with Starr Realty Group at Keller Williams Realty, and tonight we are doing our Business Spotlight. Sorry for hopping on a little bit late. Zoom is dear friend Bob Zanlugo from Norcom Mortgage, Norcom Glastonbury, and we want to make sure that we connect you. Sorry, it looks like we're having some difficulties here. Hopefully it's still doing it. But anyways, Bob Zanlugo from Norcom Mortgage in Glastonbury is joining us this evening. He's here to talk about all the changes with the mortgages with forbearance, talking about what forbearance is, and talking about great interest rates that we have going on right now if you're thinking about refinancing, and should you refi, depending upon what your interest rate currently is. So Bob, why don't you go ahead and tell us a little bit about yourself, about what you guys do, and where you're located.
So thanks, Jess. I appreciate you having me on tonight. It's, we had a little technical difficulties, but what are you going to do? That's live TV and show business, right? So, technical difficulties, there's technical difficulties in the mortgage process. So and in the real estate process. So we're accustomed to that. So you have a good team assembled to deal with technical difficulties. I'm the branch manager along with Kelly Turner here in our Glastonbury office. And Norcom, if you don't know, Norcom's a Connecticut-based company. The corporate office is in Amon, Connecticut. Which is an important thing, because when you're working with us, you're working with, in-house underwriting, in-house processing, in-house closing, right here in Connecticut. So you're not, we're not waiting on a wire for your closing to come from Utah or somewhere far-flung in a different time zone. So along with, us being local and being able to, meet our customers in person and clients in person, which is great. So we have had the Norcom has been around since 1989. Our branch has been open here in Glastonbury since 2017. So
it's been that long. Good job.
Yes, thank you. I appreciate it. So Jess, where do you want me to start? Do you want to just pepper me with questions and I'll dodge the answers? answer them, and we'll go from there? Or?
Yes, and I think people are gonna laugh because Bob and I are dear friends too. So our relationship is a little funny, as you can tell. But what I would say is, I think one of the best things to do. Why don't we start first with talking about forbearance? Because if you guys haven't heard yet, there are a lot of people throughout the nation that took an option with their mortgages called forbearance. And what does that mean? So give us a definition of what forbearance is, what it does for people, and maybe some things that we could look out for. And I can ask you some questions about that. Should somebody want to get a loan in the future, let's say they were laid off temporarily.
Okay. So forbearance, basically the CARES Act that they passed.
Early or furloughed, and they chose to do forbearance. How could that affect them in the future too? So would that be all right?
Yeah, sure. Absolutely. So when they passed the CARES Act, which was passed right at this kind of the start of the pandemic, it allowed for mortgage customers to go into forbearance, which basically means you're kind of pushing your payments off. The thought on that is that they would be tacked on to the end of your mortgage. And there's been interesting things we've seen with some mortgage companies who probably don't want to do the forbearance. So they have told their clients, okay, so you can just not make your payment in July and August and September, but then in October you have four months due. So, which makes zero sense, because you're going into forbearance because you're having difficulties because of the pandemic. If you can't make $2,000 a month for your mortgage payment, 4 months from now, you're not going to be able to send an $8,000 check. So there's been some, there's been some interesting things about that. But and there are actually some lenders out there who are just everybody. Their interpretation of the CARES Act is to put on everyone's credit report that their mortgage is in forbearance when they're literally paying every month. So it's definitely, when it comes to forbearance and you're thinking about either purchasing or refinancing, you gotta have a conversation with whoever you're working with for your mortgage, because they're going to be able to guide you and give you advice on kind of what needs to be done. And the original thought was that you had to be out of your forbearance for 12 months before you could do anything. Fannie and Freddie have given us guidance that that's not the case any longer. You can be caught up or prove that the outstanding balance was tacked onto the back of the loan, and there's other things that we can do. So it's definitely a conversation, but like FHA hasn't given us any guidance on what to do for folks in forbearance. So it is kind of a developing thing, and we just need to watch it, basically. So.
I had actually heard that there was about, it was funny, there was a stat I heard today that New York had 11% of people, New Jersey had 12% of people go into forbearance when they didn't actually need it too. And I'm sure Connecticut has a pretty similar number to that, but they chose it because it was an option, but they didn't actually need it because they weren't furloughed or they weren't laid off. It's just, they thought that why not take the option? And because everybody thought, hey, it's going to be tacked on to the end and just, your 30-year loan will be extended by those 3 months, 30 years and 3 months, it made sense initially. Yet I know a bunch of people that were applying to get loans, mortgages, to get homes, when people started getting their credit looked at deeper, when they came off of furlough or whatever may have happened, they might have gotten a new job, and that forbearance showed up, it was a major issue to get them pre-approved.
Correct. So, obviously, if we just start with the premise that if you can pay your mortgage, pay your mortgage. I know that's easy for me to say because I'm not you and having to make a mortgage payment, you being the person who's watching this. But your, forbearance isn't, it's not free money. It's not like, oh, hey, I don't have to make my mortgage payment for the next 3 months. There are, parameters around it. It does get tacked onto the back, all of those types of things. So, if you can make your mortgage payment, make it always. I think that anybody in our profession would tell you that it's, this is the biggest debt you're going to incur in your life. You want to make sure you pay it on time to protect, your piece of property that you have mortgaged, and to protect your credit, because your credit is the gateway to everything that you do in life.
If you don't pay anything else, I tell everybody this when we close on homes, it's pay your mortgage no matter what. If you have to not pay something else, do that, but the mortgage hits you the hardest on credit and everything else. So really, really important to do that. And if you're in forbearance coming out of it and you have questions about that, obviously people can reach out to people like Bob and myself. We're more than happy to guide you to the right people to talk to help you with that kind of thing. One of the wonderful things I noticed too during the pandemic is that the interest rates were amazing and they dropped multiple times, right? So what were the interest rates, roughly today? Can you give us some of those stats and tell us why we saw that fluctuation, what happened from that, and what we can kind of prepare for or expect to do going forward to prepare ourselves?
So loosely, mortgage rates track the 10-year Treasury note. So before the wheels fell off of the cart with the pandemic, the 10-year Treasury note was dropping and dropping and dropping because the market was going down as the corona fears picked up. But before we all went on lockdown, rates took a big dip, and then they kind of all of this volume flooded into the marketplace, which overloaded everything from processing to underwriting to appraisals. Everything kind of got overloaded, and a lot of companies, not Norcom, raised rates to slow it down. Norcom did not raise their rates. We just dealt with a little bit longer turn time, but with the right expectations, that's achievable. I would say today rates, a 15-year, I just locked somebody last week at 2.625 on a 15-year. I locked someone yesterday at 3.125 on a 30-year. Obviously, I'm, for all of the little language that should be at the bottom of the screen, this is not an offer to lend. This is
right.
Based on your credit score, based on loan program, and all of that. So there's lots of things that go into rates, but just to give you an idea of where they were. But you have heard a couple of times in the past couple of months about historic lows, which is not hyperbole. We did have a bunch of people call me when the Fed slashed the rate to zero, thinking that mortgage rates were zero, and how much is my mortgage payment now that I don't have to pay interest? Not how.
Do that for me too, Bob.
Yeah, exactly. So so rates are great. They have, and I, obviously I don't have a crystal ball. If I had a crystal ball, my life would be, totally complete. But we don't anticipate any large spikes in rates. They're probably going to stay where they are. Generally, go up a little bit, go down a little bit, day to day, week to week. But there hasn't, there's been a steady trend. There's nothing on the horizon that we can see that's going to cause rates to spike or rates to plummet. I think they're going to be in this general range. So, well,
something I think that's really important to also bring up to people, so many people were hurting, so many people were saving money and staying home. And actually I've talked to a lot of people who said, it's amazing how much more money we have, even though we might be working less, or we might have been for a little because we're not going out, we're not doing our normal spending habits. I would challenge everybody to say, hey, is it possible to keep these same habits you've created during the pandemic, or just modify them slightly because you've now built some really good behavioral habits over the last 90 days, cooking at home, staying home, being with your families more, whatever that may be. Can you still do that? And if so, you could have a potential to really pay down current mortgages that you have, pay off debt. We were really very focused on what we were going to do in that way and pay off anything we could pay off. So because we were saving so much from not going out to eat or doing that kind of thing. Not that you don't want to support local, you do, but there's a way to do it and be wary or cognizant of it and very smart about it. So
even think about, Jess, like how much have you been driving around? I mean, maybe in
my Suburban?
You're showing houses and stuff, but I think I filled up my tank earlier this week, and I literally think it was the third time since March that I put gas in my car. When normally I'm putting every other week, I'm putting gas in my car. You know what I mean? So think about that type of money that you're saving and try and put it to use for yourself. Use the pandemic, and I know it sounds a little, she or frou-frou, whatever you want to say, but use it as a reset. You know what I mean? Like to reset your habits, to reset your expectations. Obviously if you're sick or you're out of work or whatever, I'm not telling you to change your life, but just, there can be a silver lining in lots of things in life. So if you can find it and capitalize on it, you're going to be in a better spot.
Well, oftentimes, and I'd love to flip the tables a little bit, because oftentimes we talk about stuff like the pandemic, the global unrest that we have going on, and people's anxiety and fears that we're seeing all the time. And honestly, I think we have such an opportunity right now to also see the blessings in all of it with this great pause that we've been given. And we've talked about this in the Business Spotlight before, but the silver lining too, here's an opportunity you have as well. We also want to say thank you to everybody watching. We have seen Kelly Turner, Tyler Ray on here. Thanks everybody for tuning in. We appreciate it. If you have any questions while we're talking or things you think we should talk about, please feel free to chime in our chat there on Facebook. But another opportunity that I think people miss is that, let's say you still have a job. Let's say you have been saving all this money. Let's say you've paid off your debt. Well, maybe now if you choose to see things differently, you can live in abundance. What do you mean by that? Well, now's a really good time that people are motivated, and the higher price points are having a little bit of a harder time moving as quickly. Some of those price points may not be as quick to go as you may see, the average price point in your town. And it's a town by town and market by market basis. And yet you could have a great opportunity on the purchasing side And what if you were thinking about possibly buying that dream beach house, right?
Right.
You could be thinking about that for years and years. And if you got a second home interest rate happens to be what today's interest rates are. It's not an investor rate. And I had to actually not even realize that, and I should have, but I didn't realize that myself. So you can get a second home. So think about that. If you bought a second home at 2.875 or even 3.125, what could that do? You could afford so much more. Your affordability went up so much. So the price point you probably thought you couldn't look in years ago is probably affordable today. So if you're thinking about that second home, even though we've gone through all of this, maybe now's the time to make your family's dreams come true, right?
What is this saying, Jess? Change the way you look at things, and the things you look at.
The things you look at change.
Yep.
It's amazing. And that is one of my favorite sayings that you could have. And I think we've been so focused, and the media has been so focused on negativity during all of this. And I think they forget to see the opportunity in it. And I said it last time we did the business spotlight. I think I talked about it with Matt Carberry from Ridgeline Financial. But you have an opportunity, there's that great book I mentioned, and I keep mentioning it, I love, called What Would the Rockefellers Do? The Rockefellers took times like the Great Depression, they took times like this, and they chose to make their wealth, and they chose to make their fortune, but they chose to think differently and to see things differently in a time when other people weren't. So just another option and opportunity.
Right. And thinking differently doesn't mean it isn't a bad thing. You know what I mean? Like, and it doesn't mean you're not gonna help other people, or make donations or do those types of things to help humanity in your society and your town.
Right.
It just means, try and find the silver lining. Try and think about, what you can do to, better your own financial house, and in turn, give back to your community and the things that are important to you.
Well, that's the biggest thing. They always say to tithe, and like the church says as well, to give 10%. And the Rockefellers were huge people that gave a lot of their fortune, but you can't give unless you have it. So most people don't realize that the secret of living is giving. And most people don't realize that because they don't want to give, or they're not empowered, or they don't have the time or the means to give. Sometimes giving doesn't mean it's financial. Sometimes it means your time, it means your effort, it means your influence and how you can support a small business. It's your influence on how you can support the local charity and the local community and inspire others to do it too. So think about that as well, because it's not always about money. And I know a lot of people think charity is about money, but it's not necessarily about money.
Yeah, sometimes it's just holding a space for somebody who's in front of you, or who's on the phone with you, or who you're texting. It doesn't, it's just, being 100% present with whatever you're doing, whenever you're doing it. And
yeah, it's huge. So another thing that I noticed when we had those rates drop, I started calling some of my clients, and not only were we doing our care calls to check in on people, but we were also calling them. And I remembered a few years ago, some people I had closing and their interest rates, if I could remember back, or I thought about, the years that they bought, and I was thinking, they're probably about a 4 something or maybe a 5 interest rate. Well, I started calling them and I said, hey, I'm calling just to check in, make sure you guys are doing all right. And by the way, I don't remember what your interest rate was, and I'm not sure if you refinanced, but I bet you could save yourself some money right now if you chose to do that. And people were so grateful.
Yeah, absolutely. I mean, I would wager to say if you're over 3.75 on a 30-year fixed, there's probably an opportunity for you to refinance, whether it's going into another 30, maybe. And Norcom's awesome in the sense that we have 30-year fixed rate, 25-year fixed rate, 20-year fixed rate,
yeah, that's great.
8-year fixed rate, 10-year fixed rate. So like, and in certain cases, we could even do like a 27-year note if we needed to. So there's lots of options. And you can, because I know it kind of grinds a lot of people's gears to be like, I paid on this mortgage for 5 years. Why do I gotta go back to a 30? You don't, and it might make sense for you to not do that, but you could still make savings. I know Kelly in our office, she was working with somebody today, and they currently have a 30-year. They're going into a 15-year. and their payment is going to be like $100 less than what they were paying on their 30.
Yeah.
You know what I mean? So like, that's not the gold standard of how everything works out, but like, you don't know if you don't ask. So, you know, whether it's me,
and
Kelly,
if you can cut the time in half.
right, exactly.
Now could be, you know, here's the thing too, if you refinance that loan, let's say you have kids going into college. Well, now could be the time where you get that extra cash because you refinance.
Right.
And now could be the time where maybe you set yourself up so that your house is paid off, or you buy that investment property that when your kid finally goes to school is going to be used to sell after they graduate to pay off the rest of that tuition. You know,
Correct.
That's something to keep in mind too.
Right, exactly. So just, you know, it's worth a call to whoever you're using for your financing, just to ask the question, you know, and there's no obligations, you know, like, you know, you're not to open the conversation, to ask the question, hey, does it make sense for me to refinance? We're going to be 100% honest with you. We're not going to yes you to death when it doesn't make sense. We're going to give you guidance and say, listen, you know, your rate's 3.5, you're good. You know, you could go to 3.125, but it's only going to be a savings of whatever, you know, we'll cut it to you straight, you know, so that's the most important thing is that, you know, just work with your mortgage person and to get a grip on it. And we'll give it to you. We'll cut it to you straight.
I think that's smart. And, you know, I never even thought too of doing a 25 or a 20-year loan too. When you think, you know, one of the tips we always tell our buyers when they close, because they'll say, okay, well, you start today and it's 2020. So in 2050, your house is going to be paid off. And I'm thinking, all right, I'm going to be 70, right? 2050, I'll be 70. Do I want to be 70 and have this mortgage still? I'm not entirely sure. Well, there's some also tips and tricks that you could do. And that is, if you have a 30-year loan, if you make, I think, one additional payment a year.
Correct.
Right? And you shave off 7 years.
Yeah, I want to say it's like 6-ish, you
Okay,
know,
so,
without doing the amortization math out, but yeah.
Yeah. So roughly 6
Amazing,
years.
like what compound interest does.
Yeah, exactly. So compound interest is my favorite topic. So, so I'm going to get all nerdy on you. So, darn it. But I think that the biggest thing is, so you make that one extra payment, you shave off 6 years. All right. So you're at a 24-year mortgage. Great. Okay. So I'm not 70, I'm 64 at that point. Awesome. Now, how else could I do it? Well, maybe I make bi-weekly payments, or, you know what I mean? And there's actually extra pay periods in the year, depending upon how you get paid, that could actually work. But always make sure you're making it on principal and not interest as well.
Correct.
That's
Yeah, and none of the mortgages that we do have a prepayment penalty. So you can prepay in whole or in part at any time. And what that means is you want to send an extra $100 to principal next month, God bless. You win lotto and you want to pay it off, God bless. Like you can do, you know, so you're not hamstrung by, I've got to have this mortgage for 5 years, or I can't do anything for X number of years. You can prepay in whole or in part at any time. So.
Yeah, and that's, you know, and the other thing, so if you don't want to pay one lump sum, if you don't want to pay bi-weekly, well, just add $100, $200 if you're able to do it to principal every time you make a payment, and that may even equal more. Correct. You'd be surprised at how fast you can pay something off that way. And if you look at the total time that you have your loan and how much you actually pay for the house over the life of the loan, ooh, you want to pay that off faster if you can do it. But at 2.75 and 3% interest rates, it's kind of crazy not to do it.
Yeah, exactly. And one thing that I counsel the people that I work with, and I tell them, I'm like, if you're planning on prepaying or paying extra or all of that, depending on how frequently you do it, you're going to pay the loan off sooner. And by paying the loan off sooner, you pay less interest over the life of the loan. So you're basically, you're driving your effective interest rate down. You know what I mean? You may have a 3.125, but if you pay that 30-year loan off in 20 years, you do the high-level math that I can't do without a computer, and you're essentially probably paying 2.875 on that loan by paying it off 10 years early. So right. I try and explain that to folks when they get a little bit wound up on the interest rate side of things, and just kind of try and walk them through to understand that. So
Well, here's the thing. There was a stat that I also heard that said if interest rates go up by 1%, your buying power goes down by 10%. So if you're going to go look at a house that was, let's say $300,000 in Simsbury, right? And if your buying power goes down by 10%, isn't that 30,000? So it's about 270.
Correct.
So wouldn't you think either the size or perhaps the features and benefits or maybe the location might be a little bit different than if you had bought when you could afford more and your affordability was higher?
Right.
So sometimes people will wait and they'll say, hey, now's not the time to buy because there's nothing on the market in this price bracket and stuff is flying, it's going over list price. And I'll say, you know what, you're right. And right now you might pay a little more than you normally would, yet you're gonna have an interest rate you normally can't get. So if you know how to figure out the math, you're gonna realize that the affordability and the amount that you'll save based on the interest rate alone is worth the $10,000 or the $20,000 more you may pay right now over the life of the loan. It's so much smarter to buy when the interest rate is lower than when the interest rate is higher and the housing prices come down slightly.
Yeah,
does that make sense?
And we haven't seen any real downturn in values.
Right.
Houses are, Kelly in our office just closed yesterday or the day before with buyers who made an offer on a ranch in East Hartford, and there was 42 offers.
Oh,
and
yeah.
It went for $30,000 over asking. And it appraised because it didn't appraise because somebody was leaning on the appraiser to make it come in at value. It appraised because houses are selling and are higher prices and values are going up. So, and I don't, again, we don't see values taking a huge, dip because people are still working. People are, obviously some folks are having trouble, but it's not like the mortgage meltdown in 2008 where everything's going into the toilet. Like, this is, multiple offer. This is the territory that we're in. So
I would agree with that, except that in certain price brackets in certain towns, if you're in a higher price bracket, a lot of times those houses, what we're seeing, they're not necessarily always going multiple offers and over. Some of them are actually doing the price adjustments. And so it's important to obviously have an agent and people financial wise and mortgage wise that really know what they're talking about and know the inventory and know the market so you don't overprice your house. That's a killer 100%. When that happens.
100%. Don't even contemplate going this alone. You know what I mean? Like, there is no, there's no reason why you need to be a hero and try to do it all yourself, whether it's on the mortgage side or the real estate side. Let the professionals help you. That's what we're here to do.
Yeah. So Bob, if people have questions on forbearance or if they have questions on possibly refinancing their home, what's the best way for them to reach you?
They can call our office if they want to talk on the phone. That number in our office, 860-633-1836. They could also email me, bob.zanlugo@norcom-usa.com. Or if they want to check out my website, they could go to bobz.norcommortgage.com. And you can complete an application there. There's some payment calculators, all that type of stuff. You can mess around with it. But
the payment calculators, the mortgage calculators, looking at the different interest rates are so important. If you're thinking about buying a home, getting pre-approved before you go out, there's some agents that will just go meet you at a house.
Right.
And that's okay. That's a business plan for them. But we don't want to even put you in our car, put you in your car and take you into somebody's property or kick them out of their home if you haven't been pre-approved. Why? Because there's a couple things wrong with that. And I'll tell you why. One, it's a safety thing first. We're not going to just meet you at the house. We want to meet you at our office or on Zoom, get to know you, make sure we have the right representation paperwork. Two, we want to make sure that what you can afford is what we're showing you and that we're not going above your price bracket or crazy above your price bracket, because most of the time when you see that other house, everything else is going to pale in comparison. So we want to make sure that you're pre-approved. And the worst thing is to find that house, then go get a pre-approval and realize you can't do it, right? Then you're heartbroken.
Right.
So we want to make sure we take the time ahead of time.
Actually, Jess, I have a list of all of the properties you can see without being pre-approved here. So, if you're interested in seeing any of these, you can reach out to Jess. If you don't reach out to me first, this is what you can see.
It's approximately none. No.
Right, exactly. So, and I jest, but it's super important to get pre-approved. Jess, you just talked about it. I always say, like, if you can't afford a Ferrari, you probably don't want to sit in one, right? And that's the same type of feeling when you walk into a home and you're like, oh my God, it's got granite countertops and it's got a bonus room and we're gonna put the Christmas tree right here, and then you're like, but you have not good credit, like we can't do this, or you're furloughed, or like there's all sorts of stuff that go in it. So like just save yourself the like internal angst going to a property and looking at it and then realizing you can't do it. Like and the pre-approval process, like it's fast. It's not days, pre-qualification. It's not. You call me, we talk through it, you fill out your application. I mean, we can do all of that stuff in an hour if we have to. You know what I mean? So it's not like it's, oh my God, I don't want to do that because it's going to take weeks. And
yes, they don't take weeks. It's hours. And Bob and his team at Norcom are very quick to get back to us. I know when we need something, and we take people out all weekends, all nights, all the time. And when you're competing, you need to make sure you have that pre-approval letter and that they've verified income and assets. They've pulled your credit, and they really have done the digging so that they don't come across after you've been negotiating. I had it happen this week to somebody. They made an offer on one of my listings. They were pre-approved by Quicken Loans, and come to find out, Quicken found something that they couldn't do the loan. So they tried to flip it to another lender, and the lender found the same thing. So they're not going to be able to buy for quite a while now. And it's heartbreaking because we had come to terms. They were so excited. We checked with Quicken and there was an issue. And because we always like to call on the pre-approval letters as well, just to verify they've done everything they should have done. And that's what happened. So, I think it's really important to surround yourself with the professionals. And think about refinancing, guys. If you love your house, if you're staying in your house, think about refinancing. I mean, you might even be able to do some projects that you've been waiting on doing with a home equity line of credit or something like that as well.
Well, I'll throw it out there, Jess. You've been sitting, we've all been on lockdown looking at the same 4 or 8 walls for months. Why not do a renovation loan? Maybe it's time to do that kitchen. Maybe it's time to do the bathroom over. Maybe you need a bonus room redone so you can, have it as an office or space for the family. All of those things are possible with the renovation loan. So, and there's, Norcom does the 203K renovation loan, and we also do the conventional renovation loan, so Fannie Mae home style. So, just food for thought. If you might not be in the market to sell or buy, but maybe all the little nuances about where you live now came to light in the pandemic, and it's time to address them.
Thinking about it, Bob, that's actually a great point. So you literally could take the opportunity to essentially refinance your home with a conventional renovation loan so that you could do the projects you want to do and get a better interest rate to save money monthly and still be able to do the projects you want to do. Is that what I heard you say?
Yeah. Yep. Absolutely. And it's worth a question, right? You know what I mean? Right. So ask your mortgage person that you're working with if it makes sense for you.
Absolutely. Well, that's awesome. We appreciate you. You've been amazing. Thank you for your help. We'll make sure we post your information in the chat. And if anybody needs a hand getting loans, we have used Bob multiple times on our team for our clients. He and his team are amazing. Kelly, Scott, everybody over there are wonderful. And I think you really could benefit from even just having a conversation to see if it's worth refinancing, getting a renovation loan, possibly even maybe getting pre-approved. Maybe now you can afford the house you didn't think you could afford before because of where the interest rates are, because of what you've paid off or what you've saved. Or position yourself, get pre-approved, and see what else you need to work on your credit to get it even better, so you can do those things in the near future. So, Scott, can you see what Scott said there? So we had Scott made a comment.
What about paying off college debt with equity from the home? Yeah, there's no issue with that. That would be, cash out refinance.
That's awesome. So
Yeah.
that's an opportunity.
And some
too.
people are taking off, maybe they have student debt because they sent their children to college, or maybe they're taking money out to send them to college. So it works both ways.
Bob, you're not thinking about this too. What about the 30-somethings that still have their college debt?
Right.
And maybe they're trying to get a house, right? And their interest rates could be 8-9% on their student loans. Well, if they did a cash out refinance at 2.75 to 3.5,
Yeah.
they could save a boatload of money over the life of the loan to do that. So that would be something else to consider too.
Absolutely.
That's actually a great question.
Jess, the one thing I tell everybody I work with, soup to nuts, no matter who it is, the only dumb question is the one you don't ask.
Yeah.
So if you feel like, you don't want to bother somebody, or you probably can't do something, just ask. You're not putting anyone out by asking the question. That's what we're here for.
Yeah, that's awesome. Well, I also want to say thank you because Phil, the owner over at Norcom as well, is amazing. I love, you guys know I'm a big fan of charity. We love giving back to our community. And Phil is the same way. He has such a servant heart. So is Bob and Kelly and everybody at Norcom. They do some amazing charity events like the Norcom Cares. They had over at Waypoint Liquors, right?
Yeah.
And Brewery.
Yeah.
And then you talked about that a little bit, Bob.
Yeah, it's awesome. So Norcom has a foundation called Norcom Cares, and it's a 501c3, and it gives money to causes that are important to its employees and the communities that they serve, which is awesome. So we were a sponsor of a veterans hike here in Glastonbury. Norcom Cares gave us money to donate to that. We have had someone on our team who was affected by suicide, and Phil saw that person's post on Facebook, and next thing that person knew, there was a letter from Norcom Cares that we've donated X amount of money in the name of the person that they lost. So it's really an awesome thing. We have a golf tournament coming up on September 22nd at Golf Club of Avon, and then we do the wine and spirit tasting, usually in the winter, like in February-ish.
Always fun.
Absolutely. Yes. So it's just another great thing about working at Norcom.
Yeah, so I love working with servant leaders and people that give back and people that care. So you can tell these guys are amazing. If you're looking for wonderful lenders in our community, local business owners, local lenders, local contributors to multiple charities, these are the guys you want to go to. Make sure you give them a call. We'll post all the info down here too. And again, please don't hesitate to ask either of us any of the questions you may have on any of those things we stated before. We're so thankful to all of you for watching. And Bob, any parting words?
No, just thank you, everybody. And we're here for you whenever you need us. And again, the only dumb question is the one you don't ask.
Exactly. All right, everyone, have an amazing.
Thank you.
Other business spotlight. Have a great one.